If there's one thing I've learned in life, whether it be battlefields, sport fields, boardrooms, trading floors, etc., it is better to have a much simpler plan that can be executed easily, rather than an elaborate plan that kind of breaks down when you're actually trying to basically execute it.
Welcome back, everyone, to the Sitting Down with Paul Wallace. We spoke a long time ago. It's one of the guests that I spoke with in the beginning of my podcast a long time ago. So it's good to have you back. Good to talk again. Tell us a bit more about who you are and kind of what you do.
Sure. Pleasure to be back, Etienne. I think we probably talked. I seem to have a recollection. It would have been around about the time of the Brexit results back in about 20...
I feel like it was before Brexit. Yeah.
It might have been just before then, and I think we might have had it because you wanted to chat to kind of, let's say, a British sterling trader about what how it's going to play out and stuff. So it has been it's been quite an eventful few years since that time. There's been a lot of stuff happened, not just Brexit, but also a lot of stuff just over the last couple of years, which I'm sure everybody's well aware about. But if you want a bit of my background, is just literally I came to trading when I worked in the city. I'd been a battle manager for the Air Force, and there are a lot of very similar skill sets. Okay, and so you can read a lot about that on kind of blogs and stuff. But a lot of very similar skill sets, and I transitioned across to trading over 8 years, and then traded for funds, traded for high net worth clients, trade for myself, and then do a bit of coaching work for kind of on the performance side, helping people just improve. And then I run a little sort of online piece for. It was primarily for other veterans, teaching them how to basically to become veterans of financial markets, and that's expanded a little bit, and that's kept me busy on the side, sort of helping traders develop and evolve in their own particular trading. So it's been a busy few years.
Yeah, I know we talked a lot about in the past about how your experience in the military kind of helps with trading. It's the same concept, the same kind of discipline. You want to maybe touch on that again a little bit more, because I think that's interesting to hear how being in the military or the Air Force applies to trading.
Yeah, no, absolutely. Interestingly, is that they did a study a few years ago, where they were interviewing basically a lot of Wall Street fund managers, guys and girls who are managing, $1 billion plus trading accounts. Okay, and what they found was that they came back to these kind of 3 common traits that keep coming back, that are seen in all of those kind of top fund managers, which is namely process, discipline, and self-awareness. And we'll come back to that. We'll come back to that in a bit. But what you find is veterans, ex-military guys, they tend to be pretty good at following a process. They understand that skill is a drill. They understand that you should practice at something until it becomes an automatic response. They also tend to be pretty good, with discipline, and also they tend to be very good at self-awareness, because there's lots of debriefing, lots of feedback, which is what helps raise your own self-awareness. And then with raised self-awareness, you're in a position to make better choices, and when you make better choices, the opportunity to create a better outcome tends to come the way. So veterans, that's an edge that veterans have. But the kind of message I try to get across to everybody, regardless of your background, or where you've come from, is that process, discipline, and self-awareness, they are not God-given traits. They are not special talents. Anybody can develop that. Anybody can actually work at following a process, demonstrating the discipline to follow the process, and also the consistency. It's hard to be disciplined without being consistent, hard to be consistent without being disciplined. And also the self-awareness, which interestingly is one of the things I find, let's just call them private traders sometimes have an issue with, because they've not been used to working in a performance environment where there has been a real feedback loop, a real kind of opportunity for debrief, for review of their performance. So if they've not had experience to that, that is sometimes maybe a bit the alien concept to them, but it doesn't have to be that hard. Just basically keep good records of your trades. All right, screenshot a trade. Write a little bit about how it went. Take some time at the end of your day and your week and your month to review that. You've paid for that trade. All right, in time and money if it's a losing trade. Money you can get back. it's not really a loss of time if you've learned something and you're sort of nudging your way forward and stop making silly mistakes. Then it hasn't been a waste of time. And so that's where that kind of good debrief process helps you raise your self-awareness, and with that, all of those things: process, discipline, self-awareness. Those are the things that will actually help you have a good trading career. It's not about having the fanciest computer, all right, or the kind of the sweetest trading system, all right. Process, discipline, self-awareness. Everybody can work at improving that in themselves.
A lot of people might kind of put debrief on the side because they're alone. I guess their own thing. They're at home. It's not like a professional environment. When you're in the military or something, I guess you have a more professional environment for that. Like you're around people, you can talk with people about it. So how do you kind of do this on your own if you're gonna have to debrief your trading by yourself?
Sure, that's a good question. So if I may, I'll tell you one of the first hedge funds I worked for. I mean, there's only like 6 guys trading there, and I insisted on we would have like Thursday at 3, and basically we would the last 2 hours that Thursday. We would stop our trading, and everyone, the 6 traders, had to come together and present their trades for the previous week, the good, the bad, and the ugly. At first, all the other 5 traders completely resented doing it. They were completely dug their heels in, didn't want to do it, didn't just, really would do anything to avoid it. But actually within like, I'd say within 2 months, those guys were saying that actually it was the thing that helped them improve their trading the most. And when 1 or 2 of them left to go to other trading operations, they said that actually having that window, that ring fence time where they sat and went through with other traders in an environment that wasn't judgmental, nobody's out to get each other. It was, let's all learn from each other's mistakes. Let's all try and improve, and we'll raise our standards as traders. So, they found it useful. It works, it helps. But I appreciate if you're at home on your own and you can do it, well, what I say to people is that it is important to maybe ring fence that time. A lot of people don't want to do it, especially if they've had a bad trading session. Maybe they've had losing trades, maybe they've broken their rules, all right, or they've been impulsive trading, and actually they don't want to debrief it. If anything, they just want to basically, forget about it. They want to ignore it. They want to avoid it. They want to just basically sort of kind of figuratively, literally, mentally, they want to just put all of that trades in a little box and forget about them and say, oh, well, tomorrow's another day. But actually, what I say to traders is that your next evolution as a trader is probably on the other side of the pain of going through those kind of losing trades, those losing streaks. Embrace it, all right? Having losing trades, it says nothing about your self-worth as a human being. It doesn't necessarily mean you're a terrible trader. We all make mistakes, all right? It's about if you can make sure that you're not repeating those mistakes, or you're reducing those mistakes as much as you can. So, ring fence a bit of time, even have yourself a little process of what you go through, okay? I get people to grade their trades on the performance of it, how they executed it, and what was their confidence in the trade. Gather all those scores, start to look and see where are your best trades happening, where are your challenging trades happening, and start to look at, well, what can I do to improve that? It's not an overnight. You don't become an overnight sensation as a trader. It is week after week, just getting a little bit better every week, and it's that takes a bit of discipline, consistency, and dedication.
Now, tell me about checklists. I'm sure this is something I like to talk about. Something I like to hear about is the principle of checklists, like following a process when you trade. Because people outside trading, like especially like in the plane, in some fields, they follow checklists to do things. In trading, people tend to kind of forget that or put it aside. They say they don't need a checklist. It's easy to trade. How would you suggest someone to kind of use a checklist, and what are some of the benefits of using that?
That's a very good question. So anybody who knows me will know I'm constantly banging on about people should read a book called the Checklist Manifesto, which is it's not about trading, but actually if you read it, you realize, this is totally applicable to trading. What I say to people is, when you go to take a flight, a commercial airline flight these days, when you sit there and you're watching the air crew get on board, that pilot, that flight crew it doesn't matter if it is their first day on the job or if it's their last day on the job after 30 years, they will be going through the pre-flight checklists, right? And the reason they do it is because it works. It ensures that they make sure they do the correct thing every single time. And actually, by following a checklist, in many ways, it basically it gives them a little bit of headspace, brain space to think when they're in those particularly tense, stressful moments where if your brain hasn't been trained, when you have a tense, stressful moment, whether it be in an airplane that's got an issue, or if you're in a war zone, or if you're in an operating theatre, the brain turns to water and pours out of your ears. Okay, and a checklist just stops you from doing that. It just centers you, brings yourself back to the right spot. Make sure that you're doing the correct things, okay, every single time. And for traders, especially for new traders, you have not yet, or I believe, you have not yet, as a new trader, you have not demonstrated the self-trust that is required, that you have it as a deep inner belief that you can do what needs to be done in any moment as a trader, based upon in an environment where everything can just go wrong, everything can change and happen in a heartbeat. And a checklist, it just helps you make sure that you're doing the right things, all right? And and if you're trading your own money, why wouldn't you be doing something so simple that can help you avoid losing money? Why would you not want to do that? And if I get where the question's coming from, because I see new traders, all right, and they're like, oh, I don't care, I don't need a checklist, I'm brilliant, I play Call of Duty on PS5, I'm fantastic, what do I need checklists for? Whereas I'm like, it's exactly because you've got that attitude that you do need a checklist. I'm trying to help you, save you from yourself, basically. And you're right. Sometimes it takes a little bit of pain for it to come through. Okay, a few painful losses, but I assure you, I have not worked with any really good, sustainably successful traders who do not have a series of checklists, routines, processes in place to make sure that they are always they're always delivering at the best that they possibly can every single day. I've not worked with a single one who does that. Okay. And so, if you're a new trader, why wouldn't you want to be following the best practice of really, really great traders?
This is a good point. And my next question would be like, how do you avoid that trap of not following a checklist? Because some people, they will have the checklist on their desk, they will follow for some time, 1 week or two maximum, but then they're like, oh, I'm too good for that. I know how to do things. Then they will just jump straight to the chart and take trades. So I guess like there's no really answer. You just have to kind of have a few painful losses, like you said, to be able to understand the power of checklists. Or do you have any other trick or ways to get you to follow your checklist other than that?
Yeah. You know what? I can. You're right. People might follow it for like a couple of weeks, and then they get bored of it, and they think, "Oh, I just want to trade and stuff. I'm a trader." No, you're not. You're a punter. You're a gambler. If you're acting like that, you're not really a professional trader. But anyway, that's we'll come back to that another time. But what I will often say is that there's kind of a couple of levels you can work at. One is definition of success. So most new traders, they define success as they base it on the outcome of their trades. All right. So when the trade's a winner, they feel they're a success. When the trade's a loser, they feel they're a failure. The problem with that is that then you put yourself on an emotional roller coaster that basically, your self-worth is attached to the outcome of your trades, and invariably you are all over the shop. What I normally suggest is that, take time to redefine success. And one of the things you can redefine your success is, if I have followed my checklist every trading session for that week, that is what is actually the definition of success. Not the outcome of the trade, because we know that once a trade is triggered, anything can happen. But defining success as, I have planned my trade, I've traded my plan, I've managed my risk. If I've done those three things on my checklist, then that is success. And then from that, give yourself risks and rewards and punishments for doing that. Okay, when you've completed a week of following your checklist, give yourself a little reward. It doesn't have to be much. It's more just kind of making a connection between giving yourself a pat on the back for doing what needs to be done as a good professional trader. And equally, when you don't, give yourself a little bit of a punishment, all right, of one sort or another, whatever particularly works for you. It doesn't have to be, you don't have to get into beating yourself with a stick or anything like that. Okay, all right, it can be something simple than that, but just make make a commitment to the fact that you know what best practice is. Reward yourself when you are best practice, and then maybe sort of give yourself a kick up the backside when you fail to as well.
Now we talk about the plan, but how can a trader kind of do things with these crazy markets we had the past few years? Because for someone who has a plan, we look at the process, they want to follow the process, but we have crazy markets that they don't really understand. How can they kind of deal with that?
You're right that for the last let's say last 2 years, 3 years, markets have been mad. All right, markets have been mad. In an ideal world, you would know what your preferred market environment is, and you would only trade that, and you'd stay away from let's say other less favorable trading environments. But I recognize that as a new trader, if you're a new trader, you're looking to get exposure to trades. Okay. So, what I would suggest is that, you have to recognize that, you've got the connection between markets and method. And what I mean by that is you need to very quickly be able to understand what environment is that market in. All right. And really, I would say you've got 5 market environments. Okay. The market is uptrending. The market is transitioning. The market is going sideways. The market is transitioning downwards. The market is trending down. Okay. You need to be able to quickly identify what that kind of market environment is. And then with that, you need to have, a method that basically you either have methods that suit those different environments. Okay. Or you have a way and a mean of understanding that. And what I mean by that is, you can have the best trend following strategy in the world. But if the market is, range bound, or if it's in a transitioning phase, it doesn't matter. You're going to get chopped. You're going to get chopped about. So I think identifying which one of those market environments it is, and then defining whether your present method works in that environment. If it does, great. You make hay whilst the sun shines. If it doesn't, you have to make a decision either to adapt to the conditions, or you sit on your hands. And actually, sitting on your hands for new traders can be one of the toughest things they actually have to do.
Yeah, it's when you don't understand the market, you feel like sometimes you want to jump in, you want to take some trades, or some people just like clearly stay away. They don't understand the market, so they don't take any trades. Because it's a balance between gathering experience and trying to be careful too. So how do you kind of make that balance of being able to collect experience, but also being careful with not blowing up any account, not losing a big chunk of capital? How do you balance that?
But what I would be looking at, suggesting and recognizing is that there is that balance. There is that understanding of, understanding yourself. Okay. So, a lot of people, they trade the wrong method in the wrong market environment. And the reason being is that it's more than just them being underskilled. What it is that, they are tapping into, let's say they're tapping into some heuristics, some biases, some, let's say previous software that, that they are running in their brains, namely that, they think to themselves, well, if I'm not putting trades on, I can't call a trader. I can't call myself a trader. I'm not a trader if I'm not putting trades on. New traders don't realize that being flat is a position, right? Being flat is a position. And many times for new traders, being flat is probably the most profitable position that they can actually take. But it links into elements of human condition, psyche, the conditioning we've all had. You've gone through let's say an industrial age education system. You've been taught you've got to do a fair day's work for a fair day's pay. You've got to put in your 40 hours, blah blah blah. Okay, and then the mind thinks, well, if I'm not sat here putting trades on, I'm not a trader. I've got to put a trade on. Doesn't matter. Bang bang bang, and then suddenly they're 3 trades down for the day. All right, and they've lost money. So there is, as I said, a part of it is just about recognizing being flat is sometimes the best position. On the flip side of that, as you say, whilst most new traders want and think that they are trading to earn, the reality is that they are trading to learn. And so, there is going to be an element of taking trades. And so in that case, what I suggest, you trade at the smallest, you position size down as small as possible. and take the trade. Now, I know some people say, oh, well, you could do that in demo, and you could, but I also think that there is, even if you're trading like one micro lot, okay, it might not be ideal, but you have some skin in the game, all right, and it'll give you a little bit of exposure, and you might lose the equivalent of what might be a cup of coffee or something like that, okay, and actually that's a really cheap excuse. When I started in FX, there were no mini lots, there were no micro lots. You were full standard lot in, bang. That was the way you started. These days, traders have micro lots, all right. So if you're going to trade and you're going to recognize that this is not the right environment, I want experience, scale it down as small as possible, but still follow your processes, do all your trading as you would, but just recognizing that you are gaining experience. And you are waiting for your environment and your method to basically to be in alignment.
Sometimes we hear that to be able to perform at their best, we need to set goals about the trading we have, like the things we want to achieve in trading, or goals about finances or something. Do you believe we need goals to be able to perform at their best, or is there a different way to do it? And that kind of goes in line with the expectations to do in trading.
Yep, I think. If I may, I'll give you an experience from my journey many years ago, and
sure.
It'll feed into understanding about goals. So, many years ago, I worked with. I've been doing okay. I've been trading all right for about 12, 15 months. I've been okay. I've been all right. Okay, but nothing. I was chipping away. I was being profitable and stuff. I wasn't setting the world alight. I was just chipping away. Worked with a mentor, a guy there and stuff, and he set me a goal. He said, right, your goal is to make 2,000 pips a month in the FX markets. All right, that's your goal. Watch me do it. And so, I would trade and stuff, and he was generating 2,000 pips. He, in hindsight, he was operating at a level of unconscious competence. So, he could trade cable, and he could be, short on the 5 minute, long on the hourly, short on the 4 hour, long on the weekly and stuff. He had, he was very well, he was operating at a real high level of, unconscious competence. Whereas, I was just, working away, struggling a bit, and 1 month I'd make 200 pips, next month it'd be 250, the next month it'd be 300. All right, next month after that it'd be 350 pips a month. And and he was like, he was giving me, he was being not terribly, he wasn't being terribly supportive. He was like, clearly you're just no good at this, Paul. You're rubbish. I set you this goal to make 2,000 pips a month, and you're no good at this. You're rubbish and stuff. You can't do it. Which is not really very helpful, or not really very supportive. But then, what I realized was that he'd been trading for 25 years. Okay, I've been trading for like about 15 months. I also found out he had not made any money for his first 12 years as a trader. All right. Okay. So here I was, who basically every month, do you know what? I wasn't hitting that 2,000 target, but every month I was just getting just a little bit better, just a little bit better, just a little bit better. And the thing I learned from it, and the thing I try and share with other traders, is that he set me an absolute goal. Right, an absolute goal, an outcome to work towards. And initially, in terms of motivating me, it was really beneficial. I was like, right, great, fantastic. I have a target. I'm an ex-military man. I love to hit a target. Bang, here we go. We'll attack this. But actually, as you fail to achieve that, it can become self-defeating, because you start questioning yourself. You start thinking, Jesus, he's right. I'm clearly no good at this. I'm rubbish at this. What am I doing and stuff? I'm wasting my time here. So, it actually became self-defeating. Whereas I had set myself kind of relative goals. Every month, I was setting a goal relative to my previous month's performance. So, I made 200 pips last month. Well, let's see if we can go for 225 pips this month. All right. So it was relative to my own performance. All right. It wasn't some pie in the sky number. It was just relative to my performance. And I found that was much more motivating to me. That was much more helpful, much more supportive. And I could see, even if it was every month, I was just getting a little bit better, a little bit better, a little bit better. So I think goals are important. You just have to recognize, it's better to have performance and process goals rather than necessarily outcome goals. But I appreciate an outcome goal motivate you. And what I say is, be careful about absolute goals and in fact, relative goals relative to your own performance might well be more supportive and beneficial to you in your journey as a trader. I hope that makes sense.
Interesting. So you kind of set goals based on where you're at in your journey, not like goals in regards to being better than everyone else.
You can set a goal to be better than everybody else, but what happens when you don't achieve it?
Yeah.
People use it as a stick to beat themselves, or what happens is it triggers crappy trading behavior because they think, I'm not the best, so I better trade more, I better take on more, I better oversize my trades, I better go for it. It can lead to negative trading behaviors, all right? And that's what I think people just have to be very careful of.
The thing is, in trading, you could teach someone like all the best skills, all the best behaviors, all the best knowledge, but then when it comes to applying it in the market, they either don't do it or they have something else in mind. Basically, they don't follow through on what they've learned. How do you kind of help people or push people to execute and apply those things that they learn?
You're absolutely right. There are some people who, they will come up with, beautiful, elaborate trading plans and then fail to follow them. All right. Or they fail to follow them for any particular length of time. If there's one thing I've learned in life, whether it be, battlefields, sport fields, boardrooms, trading floors, etc., is that it is better to have a much simpler plan that can be executed easily rather than an elaborate plan that kind of breaks down when you're actually trying to basically execute it. So there's like an old military saying that, no plan survives first contact with the enemy. And, it can be true in trading, and so having a very, very simple plan, desperately simple plan that you can follow is better. And the way you can do that is even that simple plan, you can break it down into very simple steps, a bit like a checklist that actually each individual can follow. And as I said, focus on the success being following the plan more so than the outcome of the trade. I appreciate it's not always easy just to switch your focus from the outcome of your trades to the process of it, because the process, it's boring. It's not sexy. People go onto YouTube and see videos of guys, taking these great trades, and they think they want that part of it. But actually, to get you through that and get you over that hump, just having a couple of simple plan, break it down into even smaller little chunks that you can follow. And if there's particular parts that you're failing to follow, well, it will show up much, much faster. And then you can start to apply a bit of focus and a little bit of debrief, a little bit of a review on what is it about that particular part of the plan that you're struggling with that you need to change and adapt, and and you can get through it that way.
Speaking of people online, do you think social media is a good thing for traders or a bad thing?
It's a blessing and a curse, I would say. When I started, being the old duffer that I am, there wasn't really anything like the kind of material available that we have, that you can have now. So in many ways, there is no excuse for a trader to be uneducated about trading markets, because there is a plethora of information and education out there. On the flip side, just because it's all out there and because it's all free on YouTube doesn't actually mean it's actually very helpful or it's very good. It also means it can be confusing, because invariably you'll just find lots and lots of contradictory opinions and information. So I can understand that in some ways, many new traders might just get utterly overwhelmed, because there's just literally so much information out there. And as I say, I keep going back to, have a simple process, all right? A simple process. Get your own trade records, okay? Get your own trade experiences. Recognize that you're going to trade, a method for 50 trades, all right, okay? And you get 50 or maybe even 100 trades under your belt, and then basically data mine that to find out, did it work for you? What was good about it? What was bad about it, okay? The truth is, lots of people don't want to do that work these days. They want instant gratification, all right, but actually there are no real shortcuts to becoming a great trader. You've got to put the work in. You've got to love it. You've got to actually love it, all right? You really have got to love trading, and to be prepared to put in that kind of work and effort.
how do you feel like social media can be good for traders? Because they can learn things, but then they have to learn from the right people. Is it a good thing to learn from people online? Or do you think that they have to really work on their own to develop their style?
I'd say there's a little bit of a meld there. Okay, there's some really good people out there trying to put out good information to help traders. All right, and I commend them for that and stuff. Equally, there is a lot of dross on there as well, and it's unfortunate that a lot of people's first exposure is to some idiot on Instagram who's more interested in showing off what car he's hired for the day than actually his great training experience stuff. So, it's that simple thing of, if it looks too good to be true, it probably is. Trading isn't actually that exciting. Trading is actually it's quite monotonous. It's quite, it can be at times, it can be deathly dull and boring. You're just literally following a little process, just avoiding all the kind of distractions and chipping away at it. And so I think maybe there's an element of people's misconceptions about what they think trading is and what the reality is. So, as I say, if you're on social media, that's fine. I appreciate it's the world we live in. Just, take a moment to yourself. If it's too good to be true, it probably is.
What do you think people have to focus on now? Because now in 2022, of course, when we're recording this, we have the war in Ukraine and Russia, which is insane. But what do people have to focus on now? Like, should they learn a specific style of trading, you think? Or should they just kind of maybe educate themselves more about the situation? How can they proceed to be able to have the best chance for this year and the next few years to come?
There's kind of few layers to that, few levels to that. One of the edges that private traders can have is actually studying a little bit of geopolitics and how that affects markets. So, I do work in banks, go into banks. I have clients who are, working at banks, etc. And those banks, they're full of, hundreds, thousands of, equity analysts who are very clever, very bright, very driven, very smart individuals. But actually they're normally quite narrowly focused. They might be narrowly focused on one stock or a sector, or a particular country. It's a very narrow focus. Whereas actually I think a private trader, you are not going to beat banks, equity analysts teams at that kind of game, trying to, understand the inner goings of the fundamentals of a company. The reality is that's unlikely to happen. But what you can do is you can have a bigger, broader global picture. And I appreciate that appeals to me about the kind of geopolitics and also how that will affect markets. And that is what might actually offer you opportunities. So what has been fascinating to me is I talked about Ukraine back in November and said, it was a concern for me and that, it'd be something that would be on the radar. Then in January, I did a piece with European colleagues. I did a few slots with European colleagues, and I said that if it was going to happen, if there's going to be war in Ukraine, it's probably going to happen in Q1 of 2022. That's when it has to happen. And if it does, dollar ruble will break 80, wheat will rise. Okay, and those are things to be worth watching. And the interesting thing as an aside is all these kind of European colleagues were like, no, Paul. There's not going to be any war in Europe. It'll never happen. It won't. You're paranoid, Paul. You're paranoid. You don't know what you're talking about. There'll never be war in Europe. And actually, I was realised that, they've had relative peace in Europe for 70 years. And when that happens, it makes people complacent and hubristic. And that is what happened. And even when the war kicked off, people were like, why has this happened? I can't believe this has happened. I can't believe this happened. This is terrible. It's terrible. Yeah, we all know it's terrible, but it's happening. All right. And I was fascinated that people were very complacent and then people just refused to accept. They're in like denial. All right. And whilst that happened, whilst they were doing that and whilst they were trying to understand what was going on in the world, the markets had already gone. All right. Whether they basically be, dollar ruble and others had shot up, or, you're literally selling the euro, okay, as fast as you could. So as I was saying, understanding the bigger geopolitical events of the world, which means you don't have to go into every little bit of detail, which means as a private trader, it's manageable. And then looking at, right, well, what are the knock-on effects here? Okay, what are the knock-on effects in terms of, that country's currency, that country's commodities, okay, their neighbors, right? What effect will that have on equity indexes? You can start to have like a kind of a broad plan of, this is what we expect to happen. So when you see that, when you have that overall plan, when you see that kind of playing out in the markets, well, then you're in a position to basically take advantage of that. You're in a place to basically to get on that. There was a book I read years ago. I think it's called Wealth, War, and Wisdom by I forget the chap's name. He was a really prominent New York fund manager, and he basically that was his way of trading. He did it on a bigger pace, but he went through history of like the world the last 100 years and talked about how these things happened and what effects they had on financial markets. And I just found that actually I found that fascinating, and I found that that has actually helped me in terms of being able to understand a geopolitical position and then turn it into a trading plan for myself.
Now, what's left to trade there? Because we had the first initial move when the war started, when things got worse. But what comes after that? Can we still trade these, like especially oil or wheat or the ruble? Can we still trade those, and in what ways? Or is it better to just wait and kind of like wait for the next thing?
Yeah, a good question. So what I'd be saying here is what we saw was when the war kicked off, you had an immediate risk-off sentiment, all right? Immediate risk-off sentiment. So that meant things like gold, dollar, etc. They all went through the roof. Risk-on currencies, okay, especially particular ones like the sterling, which had been running on fumes for a while, was ready to roll over. Bang, that got sold. Euro was basically hit hard as well. And the thing I didn't realize until I didn't capture was that I was surprised by the impact it had on the Australian dollar and also the Kiwi dollar. They have absolutely, they rocketed up, okay, as people thought, the war would lead to kind of supply shocks that has an effect on, commodities and stuff, and basically the Aussie dollar and the Kiwi dollar, and not so much the Canadian dollar for other reasons, at best, especially the Aussie dollar, that kind of rocketed up. And really, the trade was, for the first few weeks, you just literally had to sell euro and sterling and buy the Aussie. That was the simple FX trade. Now we're in a position where everybody wants peace. All right. Now we're into like the kind of the peace trade element of it. And if you notice, if you watch them, follow these markets, any sliver of good news out of those kind of conversations between the Ukrainians and the Russians, or any kind of commentary from from those guys, the market snaps back. All right, the people are desperate. They're desperate for some good news, because really, if you look at those indices, there's American indices, European indices, since really, well, it started in November, then they kind of topped out sort of January. They've been in a I think they've been in a great downtrend. But if you've just spent the last 3 years buying those markets, you're probably squirming a bit. And so what we're looking at now is you're looking for the peace trade, okay? And that is harder to catch than you think, because it's completely sentiment driven based upon news that comes out of the peace talk. So you're unlikely to get a fundamental or a technical signal. It's going to literally just snap back because some piece of news that comes out, some kind of agreement has been made. And then what we will see, and we've already started to see it, those kind of bumps in oil, in gold, in Aussie, etc. They're coming off, all right, and that might continue. That might continue. We shall see. But yeah, right this moment, you'd be looking for the peace trade. That's what you'd be focusing on.
Interesting. Again, yeah, for sure, definitely kind of spontaneous. You cannot really plan that much. Awesome. I know we discussed a lot here, a lot of topics for sure. I know we talk about checklists, we talk about different things, the process, the plan and stuff. But where can people find you if they want to connect with you or learn more about what you do after the interview?
So my Twitter, I've got my Twitter profile, which is at FX Trader Paul. But I don't. If I'm honest, I only put little bits up on Twitter. It wouldn't be my. I don't spend all day on that. I'm too busy trading and doing other stuff. But my coaching is tradingbeliefs.com that people can find out. Or alternatively, they can search for the Veterans Trader Project if they want some specific education there. Or fxtraderpaul.com is my kind of trading blog. And every Monday at 12:30, I do like just a Monday market update for 30 minutes, just giving people insight into what's going on in the world. A quick look at some instruments of interest, and then a quick look at the live markets just for the week ahead. What might be of interest, what might be worth adding to your watch list, and that's it's free. People are very welcome to join that if they wish.
Awesome. Definitely people check you out and learn more from you, of course. I know you do a lot of good content on Twitter also, and your analysis is, of course, very detailed and very good for that. So that's awesome. Paul, I wish you the best. It's been good to catch up, of course. Been good to talk and see what you're up to after all these years. Hopefully we catch up soon after in next few years or shorter than that.
Super. Yeah. No. Nice to see you again, Etienne. And trade well to everybody. I hope it's been a great year so far. I hope it continues to be a great trading year for everybody else here who's watching.